billion stock wipeout in China's EV sector, to delicate US-China trade talks in Madrid, to billionaire investing advice and Oman's latest push beyond oil. We've got the headlines that matter most. Welcome to Finance Pulse, and here are the top headlines of the day. We begin in China, where electric vehicle giant BYD has seen more than $45 billion in market value vanish in just a few months. The company's Hong Kong-listed shares have dropped over 30% from their peak in April, hit by a brutal price war and growing doubts about its ability to fend off rivals. Analysts have raised red flags with self-ratings on BYD reaching their highest levels in 3 years. For China's broader economy, which is leaning on EVs as a key growth engine, this slump is raising serious questions about market sustainability. Meanwhile, across Europe, high-level talks between the United States and China entered their second day in Madrid. The delegations led by Treasury Secretary Scott Bessent for the US and Vice Premier He Lifeng for China spent nearly 6 hours behind closed doors, focusing on trade, economic cooperation and the future of TikTok. Both sides described the tone as constructive, but officials hinted that bridging differences on tariffs and technology controls won't be easy. These talks come just months after both nations agreed to extend their tariff truce, which is set to expire in November. In the investment world, billionaire Ray Dalio, founder of Bridgewater Associates, is weighing in with some timely advice. Diversify. Dalio argues that in an environment of high uncertainty and mounting debt, spreading investments is the single most important principle investors should follow. Dalio was in Abu Dhabi attending the launch event of Abu Dhabi Financial Week 2025. He also highlighted gold as a potential safe haven against market turbulence and the weakening dollar. His message is clear. Tactical diversification could be the key to beating the markets in unpredictable times. And in the Gulf, Oman is showing progress in its effort to move beyond oil. The country's non-oil exports jumped more than 9% in the first half of this year, reaching over $8 billion. This surge came even as Oman's overall trade surplus fell sharply. The numbers underscore the challenges of relying less on oil revenue, while signaling that Oman's economic diversification strategy is starting to gain momentum. Now, let's turn to our deep dive. And it's all about those US-China talks in Madrid. The outcome could shape everything from trade balances to tech policy to whether TikTok survives in the American market. This is the fourth round of negotiations between the two superpowers in as many months, part of a broader effort to cool tensions that have been simmering for years. At the center of the discussion is ByteDance's TikTok, which faces a looming deadline to divest in US operations or risk being banned. President Trump, who once called for TikTok's outright ban, has softened his stance, delaying the cutoff multiple times. President Trump, who once called for TikTok's outright ban, has softened his stance, delaying the cutoff multiple times. Still, US negotiators have been adamant that national security remains non-negotiable. The talks have not been limited to TikTok alone. Tariffs, rare earth exports, and broader economic ties are also on the table. Both delegations are working through complex technical issues, but officials admit that striking a comprehensive deal will be difficult. Analysts say the most likely outcome is another extension of the divestment deadline, buying time but leaving uncertainty hanging over markets. What's driving the urgency now is the potential for a high-profile meeting between Trump and Chinese President Xi Jinping as soon as October during a summit in South Korea. Experts suggest the Madrid talks are less about final deals and more about setting the stage for that face-to-face encounter. Each side is carefully measuring red lines, with China pressing for relief on export controls, while the US holds firm on security concerns. For businesses and investors, the message is simple. The world's two largest economies are talking, but the path forward is fragile. Until leaders sit across the table, markets should brace for volatility, especially in tech and trade-sensitive sectors. That's all in Finance Buzz for today. Follow the Finance 360 for more updates.